Hi everyone, welcome back to Virich. I managed to get Sashwath in and thought today we'll talk about AI and AI related stocks and what's happening in that. Is it a boom or is it justified? Hopefully by the end of the video, you'll have a little bit of clarity on what is what and maybe give you some insight on what you should do as an investor if you're looking in either to exit or enter this current cycle we're seeing in AI. So Sashwath, what's your take on this?
Okay, so it's crazy to see what's happening in the US stock market. Very interesting as well, because for investors like us, maybe we're put off by the fact that the market is climbing and rallying, but there's more to the market climbing than meets the eye. So let's look at what the market has done in the past, the S&P 500 that is. Let's look at what the S&P 500 has done in the past 3 months. I'm going to pull up a graph on my screen and hopefully we'll put up a screenshot for all of you to also see at home. So over the past year, the S&P 500 has climbed by over 25% and it's currently at $5,477. And if you look at the past 6 months, the S&P 500 has climbed up by 14.5%, and over the past month, the S&P 500 has climbed by 3.24%. So this is interesting. It's interesting for one reason, because if you had bought the S&P 500 at the start of this month, that is not exactly this month, a little before the start of June, you would have made over 3% within a month. That's a lot of money, and that's something which most of us wouldn't normally expect, because these are fluctuations which go up and down and you can't really predict these things. But the thing which is driving the market up is actually AI stocks. So this is interesting for most of us, because if you had just bought the market and sat and did nothing for the past year, you would have made over 25%. If you had bought it 6 months ago, you would have made 14% or above, and 1 month ago, you would have made over 3%. Now you might be looking at the screen and saying, look, how does that help me right now? I can't time travel back a year. I can't time travel back 6 months. Have I missed the boom? Can I buy? All these are questions which we'll be tackling today. And before we tackle those questions, first we have to figure out why the market is performing the way it is. So the obvious answer is that yes, the Federal Reserve has said that they want to cut rates. That's going to be a big boost for markets. And the second thing is that the fiscal deficit has been pumping enormous amounts of cash into the hands of corporates, and this has led to corporates doing quite well, and the stock market is enjoying this. Investors are enjoying this. So are traders. But let's take a closer look. Let's see what is exactly happening with the S&P 500. So there's this graph which the Financial Times has put up, and if you actually look at it, the percentage change of the different constituents of the S&P 500, constituents in the sense the different stocks in the S&P 500, because the S&P 500 is basically a conglomeration of stocks. So if you look at it, Nvidia has gone up by 45% over the past 3 months. If you look at other chip manufacturing companies like AMD or Intel, a few other ones, Micron, if you take these guys in the S&P 500 and clump them together, they've gone up by 17%. Broadcom, Qualcomm, Micron, these kind of companies, Texas Instruments. And if you take the Fab 5, which is basically your Apple, your Google, your Amazon, these companies have gone up by 11%. And if you look at everyone else in the S&P 500, be it your utilities or your health or consumer goods, all these sectors put together have gone down by 2% in the S&P 500. This is interesting. So what this says is that if you can diverge the trends of these two graphs, you'll see that the AI and AI related ancillary industries are going up this way and the rest of the market is going down this way. That's interesting. It's interesting because what that tells us is that this market is being driven by AI. The market boom is being driven by AI, and what that means for us as investors is that even if you don't want to get on in the AI boom, which we're not because we don't understand where the buck stops, in the sense that whether this rally will continue, what will happen in the long term, all this is a big question mark for us. But what's not a question mark is that the rest of the market is being battered, and it's being battered brutally. If you look at the energy industry especially, it's gone down by over 4% in the S&P 500. And if you look at consumer-based goods, companies which produce consumer goods, that has gone down by close to 4%. And if you look at materials, industries, even real estate has gone down. So what all of this tells us is that there is pressure in the economy, but it's being held up and not really shown in the stock market because there's this creamy layer on top which is pushing it up. So this means that opportunities are definitely there for investors sitting in the US and for us sitting over here who have access to US markets. Now, that's one end of it. You can definitely look for value buys in the US. They're still possible. And the market is actually not performing that well in the US compared to what headlines actually say. The second aspect to this is what the hell is happening with AI? I mean, why is it able to push the market up to the point where it drowns out all the poor performance of the other industries? Now, that is a question which I'll get to, but first I want to hear his thoughts on the diverging trends in the market.
This is the reason why people are freaking out about it, is because most people can remember what happened during the dot-com bubble. And it's a subject which many of the authors of these newspapers, including Sashwath, in their college days and school days would have studied about the dot-com bust and what happened and how the stock market went on a rally and then it collapsed. Now the question is, there are times in history when countries opened up and expansion happened. There was a rush in the stock market, which happened in India too. And that also was a justified boom. The question begins, is this boom justified or is it lopsided? That is very hard to say because nobody can predict the future. What is going to be happening with AI is very hard to say. And Shashwath, I'm sure, will explain further the problem with this AI valuations. But as an investor, it's a simpleton like I am. For me, what this opportunity, when Shashwath was saying this, what my immediate thought was, oh, great. It seems to be the market, Mr. Market seems to be heading to one side of the buffet, avoiding the other side of the buffet altogether. So I might go to the place of the buffet where it's empty and there's lots of food lying around there. And I might find some interesting food to eat. That is the way I look at it. If everybody seems to be loyal to a certain brand and everyone wants to wear that, I have no problem. All the other brands would be going on discount trying to attract more customers. So I'm ready to go use those other brands. That's the way I see it. So I don't see this as something to worry about, something negative. For me, it's more like blood on the streets in a weird way. So there are opportunities, like Shashwath rightly said, in the American market and certain sectors which he's mentioned, companies in those sectors which are, good, high, large cap companies with very low debt, who have good earnings, who have a long history, are companies really worthwhile looking into. I really don't like naming companies because that is not why I'm here and that's not what I encourage. I do encourage you to go do a bit of digging and investigation. That's the whole fun of investing, is to find those treasures yourself instead of someone telling you, here, I don't do fast food. So sorry if you expected me to name some companies. I'm not going to be doing that. But Shashwath has really given some great sectors which is worthwhile looking at. And if you just go spend a few hours on Google, I'm sure each of these sectors you can find companies which are really at valuable prices right now, which you can look at. Other than that, I'm sure Shashwath will explain why we are worried about the AI boom, why it's so lopsided.
Right. So when we get to why the AI boom, first off, before I get to the AI boom, I completely agree with you. We used to do stock analysis on this channel. We'll definitely do more, but we're trying to take a more hands-off approach to it because we feel like it gets too involved when it comes to giving out names and stuff. But let's just look at the big picture analysis over here.
But let me just give a quick plug-in. If you are looking for stock analysis, keep an eye out for Shashwath. He's going to be starting a Substack page very soon. The reason why we don't want to hit stock analysis is because stock analysis is something which is in-depth, it's long, and it should be spent time reading. So on the Substack platform, he's going to be definitely putting up his analysis and his views on certain companies, which I'm sure you can keep an eye out and you can subscribe to that and follow that. And I'm sure he'll do further deep dive into each company and explain why he thinks these are great buys. Sorry.
Yeah. So that's absolutely right. Upcoming videos will give you more information on this, but stay tuned. That's as much as I can say for now. But let's get back to the AI boom. And the reason why AI is booming currently is because NVIDIA and companies like NVIDIA are booming currently is because people have woken up to the efficacy of AI and have woken up to the idea that, look, AI can actually displace a lot of jobs improve productivity and efficiency. Yes, ChatGPT can't solve complex equations, though you'd be surprised at what it can solve, but it can't solve complicated equations. But at the same time, it can take over low skilled work like copywriting and generating very basic reports, doing fundamental data analysis like calculating means and averages, that sort of thing. ChatGPT does quite well at a much lower cost. So, all that said, AI seems to be something which has proven itself in a lot of ways in the way it works. So, a company like NVIDIA, which produces chips which these AI softwares need to run, then you basically have these companies having very high valuations because of their productivity and the potential for them to have a much larger and fast growing market. So if you actually look at the numbers, Nvidia's forecasts in 2025 to 2026 are actually quite low compared to what they've already achieved in the past. If you look at Yahoo Finance or any of those websites, they're forecasting Nvidia's revenue growth anywhere between 20 to 25%. That's nothing compared to Nvidia's 50% revenue growth, which they've shown before. So it actually seems like they're not pulling numbers out of the air. And if you look at whether they're trying to inflate the earnings which Nvidia will be making, that's not true either. If you look at what Nvidia's earnings have been before and what they're predicting in the upcoming year, it doesn't seem to be that much of a leap which they're trying to make. But that being said, there's an interesting theory where people are looking at Nvidia's biggest buyers. That is, people are buying Nvidia chips. This is companies like Google, companies like Microsoft, and they see that the capital expenditure increase between the next fiscal year between all these companies is amounting to just $54 billion, which is only 40% of the $100 billion revenue increase which people are expecting Nvidia to have. So this is raising alarm bells to certain people because your biggest buyers are only increasing their capex by $54 billion, but you are asking for a revenue increase, that is expecting a revenue increase from Nvidia of over $100 billion. This seems to be a little fishy. And this is something which people don't have an answer to. We don't know whether the theory is valid or not, but it's definitely an indication that, look, maybe the numbers won't be as great as what they're predicting. And a big portion of this AI boom is that, like the dot-com bubble, if tomorrow people decide that, we overestimated AI and we've really given it a valuation which is unsustainable, then you'll end up seeing the pendulum swing the other way. And there's nothing to support the market, because if you look at all the other sectors, let's look at healthcare. Healthcare is down by 1%. If you look at financial sector in the S&P 500, that's down by over 2%. Information technology is down by over 2%. Communications is down over 2%. Consumer based goods, that is close to minus 4%. Industrial goods, materials, energy, all these sectors are down by 4% or more. So there's not much which is protecting the S&P 500 against swing from the AI boom, that is. So this is something we'll have to wait and watch to see how it unfolds. But this is looking quite scary because it looks like the S&P 500 has one leg to stand on, albeit a very firm leg, which seems to be towering over the losses which other industries within the S&P 500 is making. But we'll have to wait and watch and see what happens. But for us value investors, there is definitely value out there. Keep your eyes peeled. We'll put up this graph for you to look at from the Financial Times, and you can look at the sectors which are underperforming and try to see whether you're able to catch a few good companies with almost zero debt and good financials, and maybe you can get into that if the valuations are right for you. What do you think about this?
Yes, and for those of you who did not climb on this bandwagon, who are suffering FOMO, best thing is to do is not read about it, move away from it and do other things and focus on other areas, because simple reason is it is very hard to predict from here when and where it will collapse. Everything eventually goes through a cycle and correction happens. Yes, during the dot-com bubble, lots of companies were wiped out and some big companies came out of it. Now you have all these companies like your Microsoft, your Googles, all of them which are sitting there. Microsoft has been going through many cycles and booms and busts like this during the PC era in the 80s and the 90s, then the dot-com. So this is another boom which Microsoft is sitting in. So if you're sitting in Microsoft shares, or you're holding on to some Google, I understand. I advise you to just sit tight for some time and not try to venture too far outside your comfort zone. because this AI, it's very difficult. It's like watching snowfall on a mountain, and avalanches will definitely come. Each fresh batch of snow landing is building up more and more weight on the mountain. And finally, it will take some small trigger, a skier moving up and down that mountain, to trigger an avalanche. And the funny thing is, the avalanches which are the most dangerous are found in places which are the best places to ski. Same is true with the market. The biggest harm can come to an investor are the juiciest places the investor thinks is to be in. So right now, as an investor, as the prospector, AI looks very fabulous and you feel like jumping in and doing something there. Do believe me, you have to be very careful when you tread with these waters. Like Shashwath says, even NVIDIA, for example, all of its support for its sales are on the Fab companies. Those Fab 5 or Fab 4 are the ones who are supporting. So even NVIDIA is being propped up in sales by these guys. So NVIDIA either needs rapid expansion of customer base from around the world who are going to be buying its chips at the astronomical prices he's saying they're worth now, because they're just jacking up their chip prices sky high because they see an opportunity and they're scalping. So I don't see, globally speaking, any company which can do this. Because like I spoke in another video with Arun on a podcast, if you see the valuation of these companies, market capitalization, they're in trillions. This is much bigger than GDPs of countries. So I don't see anyone out there in the world who's got such pockets and who has such capital expenses allocated to them where they can do this. If anything, geopolitically, as far as AI is concerned, people are becoming very defensive and they don't trust each other. Even old allies find it hard to trust each other. And you can see in recruitment in the US tech sector and recruitments in all over Europe, there's a strong resistance to let the secret out. Governments are telling their companies, local companies, double check, triple check, make sure whoever you recruit are absolutely people of steel. We don't want any issues happening because they don't want this AI technology proliferating between borders. What we see in movies seems to be slowly happening in reality, where even people don't trust each other when it comes to AI. So in that environment, NVIDIA is sitting and it has to ratchet up sales. And this is on the back of Intel and AMD also smelling, opportunity.
And Apple and Google are trying to produce their own chips.
Yeah, even OpenAI, Sam, is trying to produce his own chip. So whoever cracks the code first and starts giving NVIDIA stiff competition can really give NVIDIA a run for its money.
And the thing with tech is that it can very quickly get into loss leadership, where they cut their own prices and cut each other's prices and basically go all the way down.
They try to snuff the competition.
Yeah.
So keep all this in mind. And we are long-term investors. We are not speculators. I'm not trying to do something, say, okay, NVIDIA is going to go up by 200% in 1 year and throw money into it and try to get out in 1 year. That's not the game we play. We are trying to hold on to things for at least 10 years plus. So when you see that, do you see this growth potential? I don't know. There's a whole bunch of .com companies which are not there anymore. There's a company called Kozomo, I think, which was there, like Amazon, which offered delivery of products from its website within an hour, free delivery within an hour. That company went bankrupt. So the idea is now there. You see it in Swiggy, you see it in Zepto.
But those companies aren't profitable either.
Yeah, they're not profitable. Because it's very hard to do this because they're competing one against the other.
Yeah.
And each one is offering cutthroat prices, trying to attract its customer base. And as a consumer, it's great because when I go to order, I go to Swiggy, then I'll go to Zomato and I'll see, is Zomato offering something better?
Yeah.
Is coupon better? And I'll move around. As a consumer, I have no loyalty to stick around with one to the other. The only guy who's an odd one out in all this is Apple, whose customer base have, for some reason, people who use Apple, including me, seem to love Apple for unknown reasons, which we ourselves don't understand. And we're willing to fork out whatever premium Tim Cook thinks his products deserve. So anyway, I hope that kind of gave you some clarity. You want to say anything to conclude or shall I wrap it up?
Yeah, I'll just say two things.
Hmm.
We've put the link for this article in the description below. Please take a look at it. We've taken some graphs from it and we've put it up in this video, but we always recommend that you go and read it yourself. And secondly, as for Substack, that will be coming soon. So please keep watching these videos for further updates on Substack. More updates will be coming very soon, very shortly. I'm working on it, and we'll have company analysis. We'll be doing macroeconomic analysis of what different currencies are doing, what fiscal deficits are looking like. We'll be churning out content relating to that in depth for a few thousand words. So if you're interested in that, please keep watching these videos. More information.
And
will
I'll
come
share more of it when he does launch it on my Instagram page. So also on Anand's Instagram page. So keep an eye out there also. We'll try and share as soon as Sashwath starts churning these information out. Thanks for watching the video. I hope you found it informative and entertaining as always. And we will see you in the next one soon.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.